things start to align and you start to see the confluence of them, I wanted to point that out. So now I'll draw my arrows just so, that's kind of clear for you guys. This right here, and I'll make this yellow, is where we know things from an agenda standpoint change significantly. We get under 65 and we're looking for, a significant change, not just today, but in terms of the market overall. And we'd be looking for, a retest and a short there or around this 56, and really targeting down to this 32, down to maybe 20. As long as this holds, it's going to be upside for longer. And so, same thing you saw here when that line was yesterday at 60. The same thing is here, that if that holds, you're looking for that same kind of price action as yesterday. If we finally get outside of 96, we're going to target, our fulfillment of the RMD up here. Otherwise, based on the other levels we've talked about, these become our kind of end targets. And so I would be looking for something on NFP where they flush it down, hit here, push up, and then we get another entry either here or here for the move to 46.40. Those would be my thoughts on when the data comes out here. But our big line in the sand today is going to be 65. We're going to have better downside action under 55 and better upside action over 95, and probably target that 46.40. So I'll go and I'll keep a closer eye on the currencies as we get a little closer, but I got through that faster than I thought I would. So, and then I'll just bring this up really quick because I didn't hit on this, but the systemic don't really start interacting with the market until we get over a 1% move and really closer to 1.5, which based on our current price is 60 points. So that would put us, based on yesterday's close, at 46.47. So pretty close there. So that's where they become sellers, or they become sellers on the downside around 27, and then they add fuel to the fire. So I don't know, Steve, if you have anything you want to hop on or questions anybody else has. And then I will get into the currencies as we get a little closer here and see if anything is changing.
No, not really. Not really. Just keep going your way.
Yeah, it's just not. So let's see. Back here. So that's the euro. Like I said, I'm going to watch more the New Zealand dollar and the Swiss franc. So a whole lot of nothing happening on the New Zealand dollar. Okay, so the franc in medium term is kind of a forced liquidation trade here. But again, neutral trends, so that could be a position. I'm watching here as we come down. It's all happening below VWAP, in between DVAL. So if we get back inside of DVAL, we're going to watch the currency to push up, and I'll have that on a separate screen, but that's what I'm going to be watching. So it looks like the Swiss franc is going to be the one I'm keeping a closer eye on, because a lot of times, again, the currency market will tell you what the data is going to be, because it's not like the data comes out to everybody at 8:30, just to the public at 8:30. The people putting this together, the countries that may be involved in different things, they, or the banks that use the currency market, even the U.S. banks, they get this data, they position themselves in advance, and that's why you can see that, because it's a $7.5 trillion a day market instead of a $300 billion a day market. Early advanced decline line is just saying more rotational, so not a whole lot there. But otherwise, we're just trying to turn something on here, but otherwise we're just kind of in a holding pattern and waiting for whenever this, whenever the data comes out, or I'm going to keep an eye on the currency market for any clear signs maybe in the 5 minutes leading up to it. I see St. K, you posted a PMP. Is yours, did you have any different levels? Anything you want me to, or any questions on it? I probably don't have time to read the novel before the data, but I always appreciate your preps. They're always very thorough. Any questions from anybody? Or is everybody still too sleepy? Thanks, Medi. Post this one too. This is the 0 DTE options. The same thing. This kind of gives the cleaner picture that we can see, because today's Friday, so you're going to have Fridays and so weekly options and 0 DTE both here. There's kind of our line in the sand, that 61, 65 area, and everything we've been talking about. And so going to be better longs above, better shorts under, until we get to bigger areas. Yeah, you'll get there. I mean, trust me, I didn't start with all of this or anything. I learned all of this the same way you guys are. So just trying to, again, every day, always trying to figure out a way to be better, a way to, make tomorrow better than it was today, so that we can keep adding to our edge. Yeah, so I see just browsing through your prep St. K, and I see you do a better job than I do of mentioning the low volume nodes in areas. I'm going more off the developing value and then the established, but yeah, you have the low volume node down here in this, at this 36, 37, where we talked about a bid possibly coming in. Yeah, you do a much better job of highlighting all of those on your charts. Definitely low volume. If we get under 98 down to 34, which would be traversing the value area back down on the quarterly basis. So we'll watch as well. So we're starting imbalance here. Now, again, it's a lot's going to change at 8:30, and one candle can be the size, in 30 seconds can be the size of all of Globex. But if we're looking to come down here and change, imbalance is what we'll need to get down there. And we're, again, right in our, coming down right to that prior day's value area low. And then we have a few days prior with that value area high in that 77. So right in this kind of area where things change on a day-by-day basis this week. The two scenarios I have on the Frank, and again, I'm not going to have this up on the screen, but if we can't get back outside of this box, it's going to tell me we're going to go lower and make one of these kind of moves. And this is going to drive down. We see that we're coming down here. And so a lot of times when we come down around 30 to 20, we see some kind of bounce. So I'm going to watch for a bounce. And if it establishes imbalance, and I need to fill that box in. That looks so weird. Same thing. If we come down and under and then try to bounce back up and can't, then we get this kind of move back down as well. And the only reason I mention this is because this is the currency, one of the two that for the most part this week is correlated pretty well with our ES contract. So that's what I'm watching for, is that right now, if we go inbounce down or we break 1.14 on the Swiss franc, then that's going to be the early sign, hopefully in the next 10 minutes, that we would get for what the data is actually going to be, and see that as a leading thing to the data here. Yep. So again, a lot of these things don't just happen by chance. Sync K, you'll get better at spotting the confluence and realizing, the more confluence points there are, probably the stronger that level is going to be and the better it is. And so when you add in that it's, a high volume node on 2, that's not a point of control necessarily, but it's an area where you could see a strong reaction. And then with weekly DVAL, again, you're expecting something to happen there, and then you add in the gamma flip point, and now you've got a lot of participants, especially when you're talking the flip point. That's where dealers, companies like Citadel, Susquehanna, any of the options market makers have a change in their exposure and a change in the way that they handle their books. And so, all of those things start giving us a big area where we can watch for price action to really shift. So if we get over this, we are, so just adjusting my box there. That 96 has been resistance, that 92, 96, and that's what we're looking for. But I'm coloring it green because if we get over there, I don't want to forget. I don't want to forget about that. So that's the only reason. It doesn't mean I would long coming into it as resistance, but if we get over, that's where I'm going to watch. Yeah. You've got, Jane Street, you've got Renaissance, you have, Citadel and Ken Griffin being the biggest, or one of the biggest, but yeah, you've got all those firms, and most of them, they might have small changes to that, but in general, knowing where that is, it's no surprise. And when you see the reactions there, again, things don't happen just by chance when you're talking billions of dollars here. Hey, Kamal, you on with us, or are you just? Oh, there we go. Do you have anything to add? We've got 15 minutes. I've kind of gone through most, just waiting to see if there's anything, but I did briefly show the positioning that you helped, the positioning spreadsheet that you helped with, and mentioned that'll be something at some point on a website. I don't know timing, but how we can utilize that in our advantages as well. Yeah, so my expectations are that let me pull up Financial Juice and see what the consensus is, the estimate. 183,000 is the estimate. I would expect it to come in above that or at that. So similar to jobless claims yesterday coming in at the estimate, or with the UAW strike ending in October, that's going to come in stronger than they're anticipating. I'd be surprised if it comes in weaker, but I don't know that the data is going to matter. They're going to carry out the agenda regardless of what they do, of what the numbers are, and then the narrative will have to catch up afterwards. Around 9 o'clock, we'll start getting the headlines of whatever the market did, that then trying to frame that around what direction the market went, and how this report supports that on either side. Dollar is just pushing up. Big level on the dollar will be 104.20 today, 23 actually, but that's been the same most of the week. just over VWAP. It's pushing. Probably still a little too early though. Check again in about 5 minutes. I'll go over one thing just from a big macro perspective, just since we have some time here, is and I know Babyfish mentioned this when he did the one lesson in the room, and he would talk about a lot of times about the Bank of Japan and just how that has affected a lot of this year's move in general. The concept behind it is that Japan, you could keep shorting their currency, you keep shorting the yen continuously, due to their negative interest rate policy is, and I don't know if anybody else, I never knew any of this until he had pointed it out, but basically at the end of last year, the Bank of Japan stepped in. Yeah, and they introduced negative interest rates, and so their currency was going to keep going down. They're in a state, instead of inflation, they've been for the last 10 years in a deflationary economy, and so you would keep shorting the yen because it's going to go down. But then when you short, you get that money. So then you would take that money and you'd buy equities. And so then you're basically double dipping. You're borrowing money that you're going to make money on, with extremely high odds, and then putting it into something that's going that, then with everybody doing it, pushes it higher. And he had mentioned in our room a few times that every time Bank of Japan would come out with an announcement, it was something to really watch. I think it was in August or maybe September. It was either beginning of August or beginning of September. I can't remember. Maybe Steve remembers, but he mentioned this concept, and how we needed to pay attention to any of those 6 p.m. Eastern time, 7 p.m. Eastern time data releases that Bank of Japan had, because traders were really watching that closely. Well, this week, they said that they are getting closer to ending that negative interest rate policy. Let me find an article here about it and I can post it. But he had mentioned this. And so where that comes into play is if people have to start getting out of that short, then they've got to buy that currency back, which pushes it higher. But then also people will, most likely get out of the equities that they leveraged money to buy, because again, nobody buys with just their own cash. They're leveraging other people's money or other instruments. And so that's one thing from a bigger macro perspective, kind of overhanging the markets. But I've checked the yen a few times. I haven't seen any like major signals coming out, at least from the currency market standpoint, that give any big signals of what we should be looking for. At least not yet, but that was a big announcement this week that came out. Just checking through some different currencies here to see. So the euro on a weekly basis just went imbalanced down. Let's see, the New Zealand dollar, still nothing clear there. But again, the one that I'm going to watch closer, Swiss franc here, is going down. Imbalance down. We still haven't gotten down to 114 yet. We're at 1142. So this may, right now, nothing with screaming signals. Again, 65 is going to be our big line in the sand at the flip point, if we get there. If we don't get there, then we know that upside, and then we'll watch 9, 19, and 40. And usually when there's big data like this, there's the initial reaction, some kind of counter, and then a continuation of that. So you end up with like a, kind of like I have the arrow drawn here. You end up, if it goes down, you get the down move first, then you'll get some kind of bounce, and then you get that continuation, or upside, you get the up move, some kind of pullback, just like on CPI. We had the move from 44.30, I think it was 44.30 to 44.80, and then pulled back and then made its final move up to 45.22. So, a lot of times that second reaction is what I would trade, but that's going to have to be, again, at one of our levels, at a significant area, with things aligning. All right, let's see. So the Swiss franc is still coming down. We have 30 seconds. Yeah, I never traded news or anything like that before learning how to properly read the market. That just seemed like too much gambling. Thanks, Kamal. Have a good day. Let's see. Looks like early first sign might be down. Watching right in here. There we go, right up to 96, down to our 70. There's our flip line. Watching this closely to see if that holds. Notice how we're just stuck right at the flip, right at 66. Came right down where we were. And Swiss franc just completely dropping. I hope we go negative gamma. That brings so much better trading, bigger ranges. But I can't get overly biased on it. So came right where we expect an agenda shift. Without that agenda shift, we're making our move back up. So again, just don't think aggressively short until we get underneath this. Otherwise, upside is the more likely. Any questions on this? I mean, the levels worked pretty well today so far on the data. It's just been a very muted response. I didn't even look at what the numbers were. So it came in hot. It came in at 199 versus 183. So it came in above what the expectation was, which, should mean no rate cuts. And so what the market is pricing in is not going to be reality. But until we get to negative gamma, we can't really see that that significant downside play out, unfortunately. So, and then the unemployment rate dropped as well. So that says stronger labor market. They may try to use that in their narrative for soft landing, but realistically, that just means that the Fed is not going to cut rates. Yep. And so right now, there you go. U.S. short-term interest rate futures sink after jobs data as traders reduce bets on the Fed rate cuts in 2024. Market went up looking for rate cuts, and it's just that they're not going to get them. But until we break the flip line, just from the business standpoint here, this is where it's almost like trading it like a VWAP kind of. We need to get underneath that to know that we can see downside. That's just why we're stuck right in our box where price action would change. So unfortunately, no great trades or reactions off the initial move. But any questions you guys have or anything that you want me to go back to? I know that this is all new, but this will also help as we get into those advanced lessons to kind of go back and review these. or Steve, if you have anything to add. Otherwise, I don't know. I mean, we can stay on here longer. I just don't know how much more I have to add at the moment.
Yeah, I don't have my charts open, watching your charts.
Yeah.
But it looks like accumulation on the profile, volume profile, because it's stuck into the flip line.
Hmm.
Cannot see
Yeah. Yeah. I mean,
more
you just see the
than that.
volume coming in there.
Yeah, volume is building here, and it's building above the gamma flip,
Hmm.
this spot. Yeah. So I don't know.
Yeah.
I
So, I
mean,
mean,
dealers obviously buying at this spot,
mhm.
and if they are buying, they have way more information that we have. So
Yeah, they know where everybody's positioned.
yeah, that's is their job. So I'm not sure this will be ABC pattern.
No,
It still could be, but not so sure about this right now.
no.
We'll see.
Yeah. And again, like I know you guys are on the CVD lesson.
I'm not. I don't have my CVD
Yeah.
actually. Yeah, so I don't see how strong CVD push down. If someone have, please post it so I can comment.
Still hidden on here.
Yeah.
Yeah, that's what I'm using the bid ask for. And you can just, I
Yeah,
mean, to me, it's flat. There's nothing.
yeah, it's nothing actually, yeah, but it could be, yeah, it's same on your charts. It looks like it's sideways
Yep.
price, sideways on the CVD should be sideways price action,
Hmm.
but in this case, it's also if we have before that, if we have sharp move down, yeah, it's nothing. Okay,
Yeah.
CVD, there is no strong selling into this. That's why
Nope.
the dealers protect this line, and according to what I see now, I expect we will go higher.
Yep. Yeah. Came right down into it, and
Yeah,
you know,
we come to the start of the
upside
move.
until.
So yeah, so almost to the start of the move. So this push down is negated,
Hmm.
and just a second to open the table to see. Yeah, and we are around zero on the CVD. So it's actually CVD is neutral. So this means that traders are mostly neutral on this move. So this was just short liquidation that was sold from the dealers, and at least at this moment, the big question is when the RTH open, what will be the reaction? If we come back into the yesterday value area, then you can expect for sure higher. It's just
Yep. Yeah, and there's nothing on the mags from the mag 7 standpoint. The only thing we had that had any type of significant move there was Google, back inside of last week's value. So I can post these numbers today if anybody, keeps
yeah,
an eye
but
on their quote board. But
it's still over
yeah.
0.5, so its imbalance
Yep.
is still valid.
Yeah.
For,
So 0.5 is 134.50 on Google. And again, the mag 7 are all, for the most part, are all still in balance up. So, I watch these to see if they go over zero today. But otherwise, we have our levels. I want to trade more breakouts of this zone than anything.
yeah, this is short inside.
Yeah, but upside's going to be favored, at least as long as we hold this flip line. So I hope if nothing else from this very sad reaction on an NFP data, I hope you guys were able to see that.
Yeah, now we have to watch if we lose imbalance down.
Mm-hmm.
This is the almost clear sign.
Yep.
Yeah. the market will turn up.
Yeah, so we're at 45.79 is the 0.5, the negative 0.5. So that's the yeah.
We could have also the shakeout. It could happen. Okay. But so far the science is that G spot hold. And so this is what market is telling us. You see buying tails on this. Is this Fibonacci?
Yeah.
Yeah,
Yep.
so okay, this is not regular, so this buying tails is not real buying tails.
No, these are the
Yeah,
Fibonacci candles.
Fibonacci candles have just top and bottom is proper price, and inside is just average calculated. And whole candle is more or less average calculated.
Yeah. Yep. So as of now, another day of muted volatility. We can do this again next week for FOMC, and hopefully then we'll see a better reaction on things. But if you guys have any questions, just post them or tag me, or Kamal or Steve, and we're all here to help.
Technically, we just lost the imbalance, so we'll see. VWAP is here. It could be again the point where we can turn, but
yeah, I mean,
it's
if they trap people again at the
it's not likely that it will happen.
No, so just another day to wait until we get the negative gamma or see the
maybe what can happen to come back into your this small zone around 4572, and then this is 1.5 if I'm not wrong, and then turn up again. So this will be like but it's not. Look, it's pushing up, so it's all right. Actually, the best trade was to
right here
catch right here. Yeah, it was worth the risk when you see these few candles that is absorbed more or less. And look down on your max 7. It's turning up, all of them.
Yep.
So it's what is green? Green is Google. Yeah, it's lagging behind others, but it's
so the way that I use these is just in case anybody, I know Ilhan, I know you mentioned you might start looking. I keep them on here. I typically look for which one's the biggest on the downside, which one's the biggest on the upside, and then those are the two I monitor for shifts in the day. So today, as of right now, that's Nvidia upside and Google downside, but there's not. The only one that's really clear is Google.
And in general, I don't know where I read this in what book. I think it's Reminiscence of the Stock Operator, when they say when the market is start to go in some direction, bull or bear, the strongest player in the sector will start first, and then you can actually trade. If you're trading stocks, you can trade the weaker one because you can correlate with a stronger one, but don't go on the weakest one, because this is probably companies with shitty business. But you can get more gains not on the superstar companies, but on the smaller companies, because they will follow the move and they will have more percentage of the move up or down. And the key, this is the same thing when you are trading, for instance, cryptos. You are watching Bitcoin as the biggest one, and if you want to really make money, then you're trading altcoins. But let's say between first 10 or 15 on the list of the market cap, and this is where you can make real money. On the Bitcoin is too big right now and going slow, way slower than others. But if Bitcoin go 1%, then for instance, Cardano going 10%.
Yeah.
So that's the catch if you're trading cryptos, and you can trade these cryptos with all this framework that we apply in front of you. People, it's working in every market. You just have to adapt your charts and all things. And yes, Sierra is paying in the ass to adapt for the cryptos because if you get big data, uh, it's easy on ES or on the stocks, but big data on the crypto is like Bitcoin is I don't know 1 million peaks in $1 move. So you have to adapt your charts very hard because you don't have that fast internet and fast computer to monitor each tick. And again, you don't need to monitor each tick. You need to monitor correlation and proportion of the moves and proportion of the is something on the profile chart is something appropriate access or is just weak access, or you can treat this as like no access. So it's from auction market theory.
Yeah.
So poor high is it's in correlation with the how to say with the how big is profile. Okay, and if you have huge profile 100 points, then pull high one tick. It is perfect pull high, but also I don't know 1 or 2 points is also pull high on the 100 point.
Yeah,
profile.
on a big move like that.
Yeah. Keep that in mind. You always make some in help the the proper English word. It's not correlation. It's
Like ratio,
in proportion.
like percentage.
In proportional.
Yeah.
When you watch.
Yeah.
Look, we are going imbalance up now.
Yep.
Yeah.
So still same target, we'll see. Yeah, probably, I guess I could have taken that. I didn't, but I think St. K, did you get in on that? I see that you said you were flat. Did you take that trade on like I would have taken it here at the blue candle, but
Yeah.
obviously.
Can you hear me?
Yeah.
Oh yeah, I did.
Good.
I can't. How can I share or show?
What Saint? You take this bottom trade?
Yeah, I did.
Okay. Catching the falling knife, according to your knowledge right now, but okay. You have luck today.
It actually worked out. The only reason why I got out, and this is where I messed up, I had to get my daughter out the door for school. So I wanted to go ahead and just close it out. But I think it was a solid idea, especially John, with your comments. I mean, you're not supposed to pick a bottom, right? But I picked a likely area where I think it would hit and then reverse. And it's on my PMP. Yeah. You can see it in there. And I noted it in Discord when you were talking about stuff, John. So I got in after the second largest down bar. I got in.
Okay.
Let me post the picture here. I'll post it in Discord. Give me 1 second. So you can pull it up.
Yeah, great picture. Nothing to see.
Is it not there?
Yeah, it's compressed. Okay.
Oh yeah. You have to zoom in.
Man, how you read this? So much levels.
Yeah, it's a crazy thing. But the point is that I couldn't even get my first target set because they're automatically set. So it got hit. And then I
hit
I placed my second target, My second target was at right below, it was around 96. That's where I was
Okay.
aiming. But
Okay.
once my daughter started calling, I was like, you know what? I'm just gonna get out and just go. And then I came back and I was like, oh, I knew I shouldn't have gotten out. And that's my mistake right there. That was my biggest mistake because I was watching this on the weekly. If you
Mhm.
see my here, I'll
Yeah,
post.
here, if you look at this is from your PMP. I got it
Oh
pulled
yeah.
up. So
Me.
on your TPO, you can see all the confluence points here: prior day value area, yearly high volume node, monthly DVA, quarterly
Yeah.
POC, and then you add in the G spot and the CVA, and
Yeah,
yeah.
and
So
right there where
you
you're
had all the
pointing,
reasons.
yeah, you're pointing right there. I didn't put for some reason. I think that's. I'm not sure if that's the. Is that the newest one? If you scroll down, there's another one right below it. Yeah, keep going, keep going. Right there. You see right there, right there, the green 64 quarter, 61
Mhm.
quarter. Those are my singles
Oh,
too. So I was like, I put my stop right below that LVN at 60
Mhm.
or around there.
Okay.
And then I was in because the bar prior to that, the large down bar prior to that, I was like, okay, that might be it. And it was dipping right into those singles, cleaning it out, executed. But then I was like, man, I can't monitor this and I don't want to be in this. I'm not in a position yet to where I'm comfortable leaving my trade on without monitoring it. So I was like, oh, I'll just close it out. But I'm not doing that again. I'm just going to let it go.
hmm.
If it bounce
Yeah,
me
you're
out,
supposed look
Yeah.
same. You're supposed to define in your pre-market preparation your targets and your entry points, and when it's set up this show, take it and just leave it. Okay, you still don't have enough experience and enough
if you,
of screen time with this framework to be able to, for instance, if market is not behave like it should, to scratch the trade. So yeah, you just leave it. That when you get in, just leave it. It will hit your stop or your targets. End of story.
exactly,
Sure,
exactly. And
this market
that was my
was
fault.
yeah, this market was too fast, so it hits your first target too fast, so you couldn't make more on the first target. It will be great if you have time to move your first target and make more buffer for the
Mhm.
eventually stops on the core position. But yeah, it happens. Okay, but when you are still learning, just leave it. Uh, of course, according to your trading plan and your pre-market preparation, just leave it. You know,
Yeah, no, that's
if it stop you,
my error.
it's not your job right now. It's not to make the fortune. Your job is to learn how to make the fortune. So uh, that's the point. Your decision to as you are not able to monitor this and to get out and with your daughter and whatever is more or less this is excuses because you actually your decision is based on the fear to lose paper profits.
Yeah, there you go.
Think about it.
That
Think
was the
about
Yeah.
error.
this. Yeah, this is first two lessons. Okay, think about that and try to be better tomorrow. Yeah, you
Yeah,
have great trade today, so it's
yeah,
okay.
that
Yeah.
you're exactly right. And
Yeah.
yesterday, John and I were talking about this, and I missed it yesterday. And I was talking
Mhm.
about maybe placing a limit order and just letting
Yep.
it go either way.
Yep.
I'm still not at that point yet, but I'm I think I'm progressing in the right direction. I think I had it all together yesterday, and I definitely didn't want to lose sight of that, and I continued it today, and I
It seems
lost it
so.
once I put the trade on. I felt good, and then I heard
Mhm.
her, and I was like, oh man, okay, you know what? I don't know what to do
But
here,
so
and
the
that's
This
the
thing
is
I'll
problem.
say,
That's the problem. I let
yeah,
that be my excuse to get out.
yeah, once you're in a trade, and it doesn't matter if it's an external thing like that or, internal dialogue, you're not thinking clearly. You think clearly when you don't have a trade hanging over your head. And so you had the right plan, Then your job and what you grade yourself on is how well you followed that plan. And so if the plan was good and you got in, that's 100%, and then you let it go. Because once you're in and then you start getting called, or, you know, you start looking in too much to a chart or something, you might scare yourself out or get out. And that's not what you're trying to do.
Exactly.
Yeah.
You know, you
And
have to follow your plan.
Yeah. Okay. So this is I learned from this thing. So this was emotional decision that you make. You make a good trade, you get in at a good position, and then you close emotionally. Actually,
I agree.
Yeah.
Yeah,
So
that's problematic. That can't be
it's
a
not.
consistent action, and I don't think it will be, to be honest with you. I think I'm just going to
Yeah.
let it go,
Mm,
because
Yeah.
that's the whole point, right?
Yeah, you just
Yeah.
journal about it and figure out how you be better for tomorrow.